Okay, let's talk about one of the biggest, most counterintuitive shifts happening in finance today. You've got the absolute giants of traditional payments, right? Visa and Mastercard. Well, they aren't fighting crypto. Not at all. They're actually embracing it. And in this explain code, we're going to break down their massive multi-billion-dollar plan. For years, the story was that crypto was the ultimate disruptor. The sworn enemy of the entire traditional financial system. So it makes you wonder, right? Why are the biggest players in that very system not putting up a fight? Why are they basically pulling up a chair and joining the party? That's the poor question we're going to dig into. Well, the answer really boils down to one word: survival. To get why they're making this huge shift, you have to look at the threat they're staring down. And it's not another bank or some new card network. Nope, it's a totally new kind of competitor, one that was born and raised in the digital world. And this really just lays out the whole battlefield perfectly. On one side, you have the system we all know. Payments take, 1 to 3 days to actually settle. They have to pass through a bunch of middlemen, and every single one takes a little slice of the pie. But on the other side, you've got stablecoins, cryptocurrencies that are pegged to something stable, like the US dollar. They settle almost instantly, they cut out all those middlemen, and the fees are practically zero. This isn't just another option. It's a direct assault on Visa and Mastercard's entire business model. And look, don't think for a second this is some, far-off futuristic problem. The growth here is absolutely explosive. We're on a trajectory where stablecoin payment volume could actually rival the giants themselves before this decade is even over. This is happening right now in real time. So here's the bottom line. For companies like Visa and Mastercard, the whole game has changed. What used to be this niche, kind of weird digital thing has grown up. It's now a legitimate, incredibly powerful, and direct competitor to their main business. So what do when your entire castle is under siege from this brand new kind of army? You could try to fight a battle you're probably going to lose, or you can make a pivot. And you know how the old saying goes, if you can't beat him, join him. They had to take a long, hard look in the mirror. They saw their business model, one that had dominated the world for half a century, and they saw exactly where it was vulnerable. All the moats they had built around their castle, they were starting to dry up. And in that moment of truth, they made a choice, a huge one. Instead of trying to crush this new technology, they decided to embrace it, to integrate it, and ultimately, to figure out how to get a piece of the action. Okay, so that brings us to their new game plan. The goal here isn't to kill crypto anymore. No, the goal is to become the essential gateway to crypto. They want to own the on-ramp. And their playbook is actually pretty straightforward. It's got 3 main steps. First, you build partnerships. They're working with over 100 crypto companies to get themselves embedded deep in the ecosystem. Second, you go out and acquire the technology itself. And third, you plug all of that new tech into their incredible, unmatched global network of over 100 million merchants. And let me tell you, they are not messing around. They are putting serious cash on the table. Mastercard spent around $1.8 billion on just one acquisition of a crypto infrastructure company. This isn't some little experiment. It's a massive, all-in bet. So what does this all add up to? It all comes together in this one core idea: being the bridge. The entire goal is to become the indispensable link that connects the new world of crypto with the old established world of traditional finance. And if you build the bridge, well, you get to be the one who collects the toll. So what they're building here isn't about one system replacing the other. It's about creating something totally new. Their vision of a hybrid future, one that really does combine the best of both worlds. So what does that actually look like for you and me? It's pretty simple, actually. Imagine you go to pay for something with your crypto wallet. In the background, that transaction is quietly running on Visa or Mastercard's super secure network. And this is the key part: the merchant on the other end gets paid in their local currency, dollars, euros, whatever. For everyone involved, it's just seamless. And this hybrid model, it unlocks some seriously powerful advantages. Think about it. Linking your crypto wallet directly to your card, having your crypto automatically convert to dollars right at the checkout, and seeing big international payments settle in minutes instead of days. It lets them use the power of the new technology while keeping themselves absolutely essential. But here's the thing. This whole plan isn't just about playing defense. It's about going on offense, and this is where it gets really big. In emerging markets where you have limited banking and super unstable currencies, there is a massive, massive demand for stable digital dollars. For Visa and Mastercard, this is a gigantic opportunity to just leapfrog all the old infrastructure and bring millions of new people onto their networks. So, when you really boil it all down, when you strip away all the jargon and complexity, you see that these payment giants were facing a really simple and pretty stark choice. And honestly, this one quote just says it all. If money moves on blockchain, they either power it or they disappear. There it is. That's the whole game right there. It's that simple. So, what's the big takeaway from all this? The future of money probably isn't a battle of crypto versus traditional finance. It's almost certainly going to be a hybrid of both. And that leaves us with the real billion-dollar question. Visa and Mastercard are making their play to own the bridge between these two worlds, but they're not the only ones. The real question is, who is ultimately going to control that vital connection?